Okay, shall we start now? All right. Okay, without further delay, it's a great pleasure for me to introduce our speaker today, Mr. Pramodh Rai. So he is a Chief Product Officer at Modalku Funding Societies. And prior to this, he was a full stack engineer in startups, developing a Bitcoin brokerage, payments and fraud mitigation at a travel firm. And Pramodh has won 2 hackathons. One is DBS Blockchain Hackathon in 2015, Hackaway 2016, and received the Young Social Entrepreneur Award from Singapore International Foundation 2014. So without further delay, please welcome Mr. Pramodh Rai.
Hi everyone. Thanks for the great introduction. I'm wondering whether I should use the mic or if I can shout and you can hear me. Okay, I'll use the mic. Okay, so I'm going to do a few things for you today. I'll be showing you code, and I will also be showing you how a blockchain is built. The title of this talk is about the blockchain revolution, but there's so much hype that just a quick show of hands. How many of you write code? That's great. And also, how many of you have read or worked on the blockchain? Read about it online? Everyone? Okay. Problem with mics. I'm going to have this, but it's okay. So you hear about stuff like distributed, centralized, decentralized, private, public, and all of these big words have become jargons that I think most of us don't understand. So the first part of the talk, I'll be showing you how a blockchain is built. And then we'll move on into why is it a revolution, what's the impact on business, and what it means for you personally. Before I do that, let me introduce my company. We are funding societies in Malaysia and Singapore. In Indonesia, we're called Modalku. That's why she said Modalku Funding Societies. What we do is we give loans to small and medium enterprises. We're a marketplace where businesses apply to us for a loan, and investors would crowdfund the loan. So we do digital lending via crowdfunds, right? Let's say you're an SME, you come to us, you apply for a loan. Our credit and data teams will look at your financials as well as your alternative sources of data and determine how credit worthy you are. Based on that, we'll give you a credit score. Based on the credit score, we'll give you a credit rating. And based on that rating, we'll decide your quantum, tenor, as well as interest rates. And then we'll give you an offer. Should you accept the offer, we will take the agreement and create fact sheets and put your application up online onto our platform. Like for Malaysia, you can go to fundingsocieties.com.my. Investors would then log in. We have 3 different kinds of investors. One is retail folks, like most of us here and myself. We have a few hundred ringgit to a few thousand ringgit that we want to invest. We are not really happy with the returns we get by putting it in a bank or investing it in bonds and equities because the performance of the markets in the past 8 to 9 years hasn't been very good. So that's why you have alternative sources of financing and investments that are coming up. This would appeal to you. It will also appeal to institutional investors, hedge funds and equity funds who want to, who have a mandate to invest some amount of money on our platform into our loans. And also we have high net worth individuals, people who are asset rich and want to include alternative finance into their portfolio. If you take a look at how the past few years has evolved, crowdfunding started out in the US. The big names that you can remember would be Lending Club and Zopa, Funding Circle in London, Society One in Australia, Tianrong in China. In China, there are 1,500 platforms that do this. So some of them are fraudulent. They take your money and they run away. And some of them are actually good. The top 4, I would say, are very good. And Southeast Asia is sort of the part of the world where crowdfunding is now coming into. And regulators have woken up. They are issuing licenses. We are one of the 6 in Malaysia to get a license from Securities Commission. In Singapore, we've got a license from MAS to operate. And in Indonesia, we're helping to sort of advise on the license requirements. And once the government is ready, we'll then apply and qualify for the license. Very important because you don't want platforms coming in, taking your money, and then running away. You actually want to finance businesses. So what we have done is we started out in 2015 in Singapore, and we expanded in 2016 to Indonesia, and 2017, Feb 7 this year, we launched in Malaysia. So far, we have done a couple of crowdfunding campaigns to the tune of 67 million Singapore dollars, and we have funded over 1,000 SMEs. So we are the only regional crowdfunding company in this part of the world. And we hope to continue growing and serving businesses as well as investors. The benefit for investors is that you get higher returns than usual. And the benefit for businesses is when you go to a bank, and banks have a rigid credit scoring model, they might typically not approve you. But if you come to us, we look at you holistically, like not just your traditional metrics, but also all your other kinds of metrics. And chances are we'll have a higher likelihood of approving SMEs. That's all I'll share about our company at this point. Let's go into blockchain. What is the blockchain? There's a whole bunch of jargon that will come into everyone's minds, that's for sure. The first idea of what a blockchain is was actually from Bitcoin, right? In 2009, someone called, or a group of people called Satoshi Nakamoto, released a white paper in which he shared what Bitcoin is and how it's going to be a revolution. So let's look at what he said. This is from the white paper. Network timestamps transactions by hashing them into an ongoing chain of hash-based proof of work, forming a record that cannot be changed without redoing the proof of work. I'm not sure about you, but when I first read this, I didn't understand what it was. I was like, that's interesting. Is it real? Because at that time, many years ago, when we were building the Bitcoin brokerage, we were like, this is interesting, this is digital currency, but it's also got a lot of shady things that are going on. And the earliest users of Bitcoin are people who were doing very funny stuff, trading drugs, human trafficking, pornography, assassination on the deep web, because you cannot trace Bitcoin so easily, right? This is actually the same thing that happened with internet in the early days. The folks that used the internet were also the shady people. Somehow they seem to catch on to these technologies. They are the earliest adopters. But slowly it started becoming more and more mainstream. And now, after 9 years where we have been studying Bitcoin and the blockchain, I can actually explain to you with confidence in my own words what blockchain is. And I encourage you to also describe it in your own words, because you will really understand then what it is. It's a list of blocks that are linked together using hashes. Each block contains timestamp, transaction data, hash of the previous block, index, and its own hash. Still a bit of, quite a mouthful, but I will explain to you very clearly by the code. Now let's get into the jargon. Distributed, right? What does distributed mean? Let's say I have a copy of the blockchain with me. It is relying on just one computer. When I share it with everyone in this room, it becomes distributed. That's all it is. It's just across multiple nodes within a network of computers, right? Decentralized and centralized. If I am updating the blockchain and you rely on my update of the blockchain, so you update your blockchain based on me and everyone is doing that based on me, then it's centralized blockchain. For it to be decentralized, it would mean that you can update the blockchain and I will get updated. You can update the blockchain and everyone will get updated. Anyone can update the blockchain and everyone will get updated. That is decentralized. I will go deeper into this again. It is secure by design. How? Through the idea of hashes. And I will show this to us again. Let's start. So what I want to do is to build a small blockchain with you guys. Okay, here we are. Now let's look at, for all those who are engineers, right? I've actually initialized a block, right? Within a block, there are some things which are important. Like I mentioned earlier in the definition, if you look at previous block hash, index, data, and timestamp. So each block would have the hash of the previous block. What is a hash? Just take the hash as a unique identifier for now. Index identifies what number the block has. Data is very powerful. Data essentially tells you money or an object which can be a smart contract. Timestamp, this tells you when the block was created. Hash of the current block, and I'm computing the current block's hash here. Now let's look at how I do that. First, I use a hashing algorithm, right? SHA-256. You can use your own if you want. And then in that hash, I am incorporating the hash of the previous block. the index. Actually, I'm incorporating everything here. If you can see my mouse, I'm incorporating everything here. But I want to walk you through the remaining ones. Data as well as timestamp. So now this hash of the current block is made up of the hash of the previous block, its index, its data, its timestamp, right? So this uniquely identifies that block. What does this mean? Now you have a block which has its own hash, and when you have another block, right, that block will have its own hash which is made up of the previous block's hash plus the data inside it. And then you have another block which is made up of the hash of the previous block and its own data. Now, if you try to change the transactions or any data in the first block's hash, you not only have to change that, but you have to change that plus every block all the way up to the latest block, right? This makes the block secure because computing this hash requires computing power, right? And now imagine if I distribute this blockchain. This blockchain I give to everyone, and somebody changes my blockchain successfully, changes the hash of this block plus all the other blocks. There are 9 other people who would say, hey, hold on, there's something wrong. Your block is different. You are probably wrong. Majority of the people will then say that our blockchain is correct and this guy's blockchain is wrong. This makes it even more secure. So what I've explained to you so far, just through this, right, is distributed, centralized blockchain, and hash, right? How do we then move on to make it decentralized? I will come to that in a bit. But I want to draw your attention to this idea here of a nonce. Let's do it right now, actually. So let's talk about the nonce. You have a hash, and you have something called a difficulty level. Let's say it stipulates that the first 4 digits of the hash have to be a 0. So no matter how you go ahead and you hash it, I need the first 4 digits of this resulting block's hash to be a 0. You can't do it just by using this data, right? Because they're all fixed. That's why we introduce the idea of a nonce. We start with, a nonce is just like a counter. You start with a 0, and then when you hash it, you look, is the first 4 digits 0? If it is, that's great. If it is not, then you increment nonce by 1. And then you hash it and you see if it's fitting. If not, increment by 1. And you increment it all the way to a point where it fits. Now you have a block with the correct nonce, and you propagate this block to all the other blocks all the other nodes in your network. They will receive it. Calculating this nonce was not easy, right? That's why you have Bitcoin miners in China having massive mining farms with specialized hardware computers, just going all the way to the point where they can calculate this thing called the proof of work. Now, all those nodes that would receive your block, they can verify it easily, right? And they'll accept it onto their block, onto their blockchain, and they'll start mining the next blockchain. This is a way where different computer nodes are able to achieve consensus. And consensus is based on proof of work. And proof of work is something which is difficult to calculate but easy to verify. Now I've covered the next key thing, which now allows you to understand what is decentralized blockchain. Okay, so let's go into my blockchain generator. This is purely arbitrary. I built it just purely to understand the Ethereum blockchain, Bitcoin blockchain, Coda, as well as IBM's Hyperledger. They're all different. I did this from scratch just for us to illustrate like what a block is and what a blockchain does. So let's say I'm going to generate 5 blocks. And I have written a persist block service, which is an object of this, right? And I create a new one. And then I create the first block. So over here, creating the first block, if my file is empty, then I'll go ahead and initialize a new block. Over here, you have block.new, where I'm just passing in all the arguments for it to initialize. You actually come here, and then you initialize with a hash. Once this is done, I will then go ahead I run a for loop to generate the next 5 blocks that I want. Actually 6 blocks because I'm running from 0 to 5. So 0, 1, 2, 3, 4, 5, that's 6. Right, what's going to happen is I have this function here, perform. So I'll come here and then I'll run perform. Now within perform, block is equals to next block. If it is nil, then I'll generate the next block. And the next block is nil. So I'll go ahead here to generate the next block. You guys can see from my mouse, right? Okay, that's great. Just stop me if I am going too fast or anything. Previous block, I get the last persisted block, right? And the last persisted block is actually residing in a file here. This is the block. This is the blockchain file. It can be a flat file. Even your database can be a flat file. So people think of like blockchain as something that's quite 3D structure, but it's not. It's actually something that looks like this. So I'll read the previous block. Where am I? Last persisted block, right? Okay. If it is empty, I'll just return. Otherwise, I'll get the last block, and then I'll parse it into a data structure that I can understand, which is JSON. Then then what I do is I create the next block index, which is the previous block's index plus 1. And then I initialize a new block. Once I do this, generate new block is done. I open a file, I write it inside, and I have created another block on the blockchain, which has the hash of the previous block, its own contents, and its own hash. We're going to run this. So let me just delete everything and save it. I'll run it. I created 7 blocks, right? Here we are. I just deleted the previous one. And over here you can see the first block is called the genesis block because it doesn't have a previous block that's pointing to it. And all the next blocks would have the hash of the previous block. Am I still with you guys? Maybe not, but you kind of understood some things. What I've done is I've put everything online on GitHub, as well as I'll write an article and share it with all of you so that you can refer to it over and over again. Because in my belief, this is going to become more and more mainstream. So if you understand it, you'll be able to understand the other blockchains that are in the market, and you can do stuff with it. If you're an engineer, you can build stuff. If you are discussing having your own token, like someone sitting here was, you know how to think about that as well. Let's come back to the presentation. Okay, what makes the blockchain powerful in business? I'm going to bring you right back to the code, which I hope you guys like. The next part here, all of this stuff you know already, right? Previous block hash, index, and data. It's the data here that makes it powerful. Why? Because this data can represent money. In the Bitcoin world, there is no such thing as Bitcoin, right? There is no such thing as Bitcoin. This is a coin, right? In the world of Bitcoin, there is no such thing as a coin. It's a hash, right? A hash, and the value can be broken down into 8 decimal places. So you can technically have 0.0000001 Bitcoin. And you can have 100 Bitcoin or 200 Bitcoin, which in today's world, 1 Bitcoin is worth about 6,000 Singapore dollars as of this morning, can represent quite a lot of money. And you can program it here. Or this can be an object. Remember I showed you earlier, this class here, block, is an object. In the world of programming, this becomes an object. A contract can become an object as well. And you can initialize it in data. And then you can hash it, and then you can store it. It's useful in the world of insurance, in the world of supply chains, which I will cover in a bit. The rest is stuff that you know about, the timestamp and the hash, which just makes it easier for you to query the block in the blockchain and understand about it. Nonce I spoke to you about is about proof of work. We spoke about decentralization, right? Where you have one node that can update all the nodes. So over here is just showing you that how decentralization happens is by proof of work. I've said this a few times. In this slide, I want to share with you that proof of work is just one way, which we learned from the Bitcoin blockchain, which requires miners to calculate the proof of work and share it across the network so that it can be accepted in the blockchain. And these miners, when they propagate their block, they actually, in that block, have one more transaction where they share 12.5, no, they send 12.5 Bitcoin to their own address. That's how a miner in every part of the world is earning about $60,000 every 10 minutes, right? They mine the blockchain, they propagate the proof of work, and in that block, they have sent money to their own address, right? That's how it works. Why is this powerful though? Because you don't need middlemen. It improves efficiency, reduces costs, goes without saying. But this is what's most interesting about it. You don't need a government. You don't need a regulator. You don't need a bank. You don't need remittance companies. You can do it right now by yourself. If you open up your computers, we can set up the node on your computer, and we can start sending each other money. And we can not just send each other money, we can send each other messages over the internet. So right now, money and contracts are programmable. And this is why the whole hype exists in the world, actually. And it's very interesting, which we are poised to take advantage of, all of us in this room. The killer applications of the blockchain. So everyone, there are many news articles that say blockchain is interesting, but we don't know if it's here to stay. Is it going to be mainstream? Is it going to succeed? It is going to succeed. It is increasingly succeeding, in my viewpoint. And I can show you all the data about it. You have bank executives who say Bitcoin is fraud. You have folks that say we cannot control this, we should ban it. But the fact here is you cannot ban the blockchain. It's on everyone's computers, right? You can try to ban companies from transacting on tokens, but you cannot ban the blockchain. You can't shut down the internet. Likewise, you cannot shut down the blockchain apps which are out there. Bitcoin is the most successful application of the blockchain. It is, so if you imagine, right, something that can start from so small and go up to 50 billion, which is really a drop in the world of capital markets. But 50 billion is still a big amount, right? I'm sure you would agree. Hackers around the world are trying to hack the Bitcoin blockchain, but so far, no one has been able to hack the Bitcoin blockchain. It has not happened. You can hack companies, right? Exchanges and brokerages that transact, that help you buy and sell Bitcoin. You can hack their wallets because the private keys and the public keys, they're all stored on servers. You can hack into the server, you can steal the private key, and you can start transferring money. But you cannot change transactions that happen on the Bitcoin blockchain. Theoretically, you can. You need to have enough hashing power, which is amounting to about $800 billion right now. So no one person can do it. You need a country to do it. And of course, there are countries that are doing some interesting hacking activity, but they haven't succeeded as well. So Bitcoin blockchain has so far been the most successful use case of the blockchain. ICOs. You guys know about ICOs? How many of you don't know about ICOs? Okay, quite a few. Let's talk about what an ICO is. If you don't know ICO, you know what an IPO is, right? Okay. So IPO is a initial public offering. It's an event where you raise funds from the public market, right? You have investment bankers that are involved. You have accountants. You have finance people. You have a ton of people who get into the process, and they all take their cut along the way, right? And when you finally go out into the market, you have shares that can be traded on the secondary market. Now with ICOs, you can do the same thing without all these middlemen. You don't need the investment banker. You don't need the guy on the securities exchange. Probably you need a lawyer because he'll advise you how to set up your entity. But even then, there are tools online that help you do it by yourself. And the leading solution is the Ethereum solution. Bitcoin was designed for payments and remittance. Ethereum is designed for smart contracts. You can go ahead and fork the GitHub repo of Ethereum, which is ERC20 protocol, and you can create your own token. So right now, I can create Pramodh token using the blockchain that I showed you, or I can create Pramodh token using Ethereum's blockchain. And then I can say, if you want to engage in my ecosystem, you have to own my tokens. And businesses across the world are doing that. About $1.5 billion have been raised so far. That's fast. There are businesses which have raised 35 million in 30 seconds. And I'll show you which they are, which of these businesses are. That's the second killer application of the blockchain. And it's got a whole bunch of people worried as well. Because clearly you're going to talk about, okay, if you're going to go down this path, then what is my value, right? Those questions arise. Experimental efforts. Let's talk about some of them. Remittance. I was in San Francisco last year. At the airport in Singapore, I was rushed because I was late for my flight. And when I went to SF, I sort of stayed with my friend who works at Google right now. And he was the guy that I was relying on for money. I said, hey, Sriram, his name is Sriram. And I said, hey, Sriram, can you give me $500? And then he said, uh, okay, but do you have anything to pass to me? And I said, have you heard of Bitcoin? And he said, yeah, I heard about it, but I don't really believe in it. So I got him to set up an account with Coinbase, which is a Bitcoin exchange. And I transferred some Bitcoin to him on the spot. He cashed it out into a bank in America, and he gave me $500 the next day. The transfer from Singapore to here or anywhere, right, just took 10 minutes, and it was done. That's remittance. I just showed you what remittance is. But that's one-off, right? How many of us are going to travel like this? But then you must think about also folks that live abroad and they want to send money back to their families, right? This is why you have massive remittance corridors. You have US to India, which is one of the biggest ones, US to China. You also have Singapore to India, Singapore to China, and a whole bunch of other corridors. So if you design an app which allows you to remit money quickly, then you don't need a bank technically. You need the bank to cash in and cash out. What does that mean? You buy Bitcoin using cash, and then you sell Bitcoin into cash. But the underlying infrastructure is the blockchain, right? That's what it means, and that's what's increasingly happening. Payments. So payments is experimental. You do see that you can issue tokens which can have what currency represents, right? Currency is really just three things. It is a unit of account, medium of storage, and one more, which I'm forgetting. Unit of account, medium of storage, and transfer of value. So your tokens can represent that, but people are not really using tokens to buy coffee, because if you use Bitcoin to buy coffee, like a cup of coffee, tomorrow you might be able to use that same to buy 40 coffees or half a coffee cup, because the price of Bitcoin is just going up and down so much. So it's still experimental. Ownership. Real estate is a prime example of where we can use the blockchain, because in many parts of the world, land ownership across generations tends to make it very difficult for you to identify who owns this piece of land. In India, I know a bunch of folks that are doing this. In New York as well, I know a bunch of folks that are doing this. Identity. Have you heard of how Norway is issuing identity cards to refugees based on the blockchain? You have? You should definitely check it out. I do think that's a prime example of how you can use the blockchain. So refugees coming into the country are being issued identity cards which are based on the blockchain. And if you think about what the blockchain is, like I just showed you, you can see how it's happening. Insurance. I've got a friend in Singapore who is developing an app which stores your IP address as well as your identity on the blockchain. So when a natural disaster happens, like say an earthquake or a flood, and people have claims to make, you can reduce the fraudulent claims by just looking at the blockchain, because it will show you what your IP address and your identity is, right? Some folks claim that I was here, my building collapsed, I survived, give me some money, right? But then the blockchain will show that you are not here and reliably show that this data was not tampered with. Supply chains, that's something I'm personally interested in. I mentioned earlier that funding societies give loans to SMEs, and SMEs tend to have, you have all kinds of SMEs, the small ones, the medium ones, and also some of the bigger ones. They would have their invoices which are issued as part of a supply chain. We don't just want to fund a small part of the supply chain, we want to fund the entire supply chain, like back to back. Many companies are trying to do this right now. In China, there is one company that I know has done a good job. It's called Tianrong, but the rest are still experimenting. Risk. Something with so much money and so much value is bound to attract a lot of interest, which it has. And China, for example, looking to ban cryptocurrency, South Korea. You also have hackers that are able to break into wallets and move money out of the wallets. Exchanges which are being taken down. Mt. Gox in 2014 was robbed of $500 million. These are huge amounts of money. And whichever side of the table you're on, you're talking about big stakes. So these risks are there. If you're thinking of doing an ICO, creating your own token, you should definitely look to make it secure. That's the basic thing that you should look out for. If you're looking to, I'm not sure if we have any regulators in the room who are thinking of banning Bitcoin in Malaysia. But if you're thinking about banning Bitcoin, right, try to understand that you can regulate the brokerage and the exchange, but Bitcoin cannot be banned. And I can prove it to you here, in person, or anything, right? Anytime you want. So when I read these news articles, I'm like, okay, China didn't technically ban cryptocurrency. Cryptocurrencies exist. It's not going to be banned. Let's look at some of the interesting ICOs. Anyone know about Kick Messenger? It's apparently nice. 2 people. Okay, so it's not that popular. But apparently it's doing very well. They raised $100 million in ICOs. How does an ICO work? Should I talk about that before I tell you this? I think I probably should. So you have a wallet, right? You can, based on the ERC20 protocol, I'm just thinking of how deep I should go into this. Imagine you have an address. Everyone who owns tokens, Bitcoin or Ether, can send money to the address, right? And you will then be issued a token. Say I'm going to issue, let's say I create 1 million Pramodh tokens, and I'm going to conduct an ICO. Every conference that I go to, I'm going to get someone to pay me in using my own token. So I'm going to give 20% of my tokens, which is 200,000 tokens, to conference organizers across the world, right? And for some reason, they decide that it's worth it to buy Pramodh tokens. And the way they acquire my token would be based on Bitcoin or Ether, okay? So 200,000 tokens, I can set the price to say 1 token, or maybe 10 of my tokens is equals to 1 Bitcoin, and 20 of my tokens equals to 1 Ether. So you would give me Bitcoin and Ether, and then I'll take that Bitcoin Ether and I'll cash it out. I'll go to an exchange and say, hey, I have 20 Bitcoins, I have 50 Ether, let me cash it out. I'll use that money to make the most amazing presentations that people like. And I promise you all of this in a white paper. So if you go to any company that's doing an ICO, you'll see that they have a white paper, they have a yellow paper, they have a position paper, all of which is explaining what they are going to do, but they haven't done. They are raising this money to start the project. So in the in the traditional world, you need to raise money based on something that you have built, right? You go to a VC, the VC will ask you, so what's the progress, right? What's your traction like? What have you built? Who's your team? And so on and so forth. In the world of ICO, all of those questions are asked, except you don't technically have to build your project yet. You just have to show what you're going to do, and then you show who your team is, and people are buying into that. Kick, which is a messenger, raised $100 million. What are they doing? They used to have points in their app. You can use that point to transact. How many of us here have Grab? I'm sure most of us or everyone has Grab. Grab is issuing points, right? You can technically change Grab points into Grab tokens, and you can use that to transact with businesses. That's what Kick is doing. Next will be Omise. Omise is looking to allow cross-border transfer of money using its tokens. It's a company based in Thailand. They raised about 20 million. Reason why I highlight Omise is because it is one of those companies which I find is doing it responsibly. There are companies which are like, this is a world of ICOs. Let's go in there and let's get the maximum money and then think about the rest later. Omise decided to cap their upper limit of how much money they're going to raise. And they're going to use that money to build a platform that allows cross-border transfer of money. Then you have Brave browsers. Brave is a browser which the founder of it is, he developed the Mozilla browser. And he says that the online browsing experience is broken. You have to give so much of your personal data to advertisers, and you end up having a slow experience because you are bombarded with ads. Now what he has done is he's looking to create a new browser, and he's giving you something called BAT tokens, basic attention tokens. What it does is it rewards you tokens for your attention. If you watch an advertisement, you get some tokens. When you go to someone's page and you find that this person's web page is amazing, you can reward him with tokens. If you notice, to finish off Brave, they raised 35 million in 30 seconds. That's probably the fastest that I've heard about. And that's also pretty crazy. So if you look at all these three, what they're doing is they're developing their own ecosystem, they're issuing their own tokens. And this is powerful because previously you needed to be a country to be able to issue currencies. Right now, you can be a company or a person, and you can issue your own token, which is a digital currency. You don't need sovereignty, but you need to fork a repo on GitHub, right? And that's inherently empowering. You might hold Malaysian ringgit now. or you might hold Singapore dollars, or you might hold US dollars. And your belief in that country's currency would be based on how good is my government, what are my export and import amounts, what is the economic outlook, and so on and so forth. That's why you would hold a currency in your hands, or you would hold currency to transact on a daily basis. Increasingly, people are holding Bitcoin because they find that when the Greek crisis happens, or when something in Venezuela is going down, transferring my money into Bitcoin is a safer way to hold cash, especially if I have a large amount of it, right? Which is inherently empowering. I'm driving now towards the conclusion. I'm not sure how much time has passed. 12:30? 12:10, okay. That's nice. When I did a dry run this morning, I just took 30 minutes, but somehow now I'm taking a lot longer. So blockchain is already sweeping through industries. And what you can do about it, let's talk about it from 4 perspectives. First of all, as a student. How many of us here are students? Okay. For all of you guys, I would love to be in your shoes because you have time to read up on various white papers as well as the protocol itself. But you can essentially understand that this is a fundamental global change that is sweeping across the world and how you can use it for companies that you decide to set up. When I was a student, I had this thinking that, oh, I need to start my career in a big corporation, get a brand name on my resume, and use that brand name to do something else in life. But if I were to go back to being a student, I would just start my own company and use my knowledge that I have right now to do a lot more interesting work. So I would strongly advise learning about the blockchain. As a developer, this is the best time for you to build applications of blockchain. But recognize what you would use the blockchain for. Are you creating a token, or are you just looking to store records securely? Storing records securely, you don't need those huge ecosystems that are out there. You can potentially build your own blockchain like how I did. And then you can say that, hey, I'm using distributed ledger technology, right? Which is also quite powerful. As a business owner, know when you need it and when you don't. I mentioned that we give loans to SMEs. SME owners, some of them tend to ask me, hey, should I look to use a blockchain? Because there's so much news going around it. My answer to them has always been, what do you want to use it for, right? And the same thing that I told students and developers, if you are looking to create your own token for transaction in your own ecosystem, then yes. If you're looking to store your records in a way that cannot be altered so easily, then yes. But at the same time, you can also use distributed databases if you want. It's easier because you need specialized skill set to understand what a blockchain is and build that. And most SMEs don't tend to have that. And as a VC, when people come and pitch to you about invest in my company, I'm using blockchain, distributed ledger technology, and jargons and so on, it's very important that we differentiate reality from hype. Fact is, all of us are right now a kind of a VC. When you go into the ICO world, you can buy Bitcoin and Ether and invest in some company. So you need to know how to separate hype from reality. There's a lot of scam going on in the ICO world, but your understanding of blockchain and why it's being used and the quality of the team behind it would be very useful to decide whether I should put my money here into an early stage Bitcoin-like company, or if I should just avoid this altogether. All right, let's recap. I'm getting to the conclusion now. Blockchain is a secure system of records that is distributed, decentralized, and immutable. Immutable because of the previous hash of the previous block and the current hash. This is something which we all can understand now. Next. It can be public, it can be private, it can be distributed, it can be centralized, it can be decentralized. We should all understand this. If you don't let me know, I'll explain again. For decentralization, you require proof of work or proof of stake. I mentioned earlier, Bitcoin is a killer app of blockchain, and the next one that seems to be very awesome is ICOs. And the most important thing is that currencies and contracts are programmable now. You can write code to develop your own currency or develop your own contracts. And that makes you very empowered. I think that's it. Thank you. Thanks for your time. Questions?
blockchain is going to scale up to like a world. That means if mining is sustainable at that scale, or is there a future of a better algorithms or like compute GPUs that can sustain such big energy required for hashing, like mining the hashes?
Yeah, you kind of answered your own question, you realize? So yes, the answer is both of them. Firstly, you can develop a better, more efficient algorithm, or you can improve the Bitcoin protocol in such a way that you have a larger block and so on and so forth. You can do that. Or next, you can have better chips that allow you to do mining at a cheaper rate. But the question is, you had a second question inside that, which is, can there be a new currency that comes up, right, that becomes a global currency? The answer is yes, but adoption of that currency is a problem because any technological product goes through the whole adoption life cycle, right? You have your innovators, early adopters, early majority, late majority, and then your laggards. Right now, Bitcoin is at the stage of early majority. You can see that the wacky innovators and the wacky, what was the first word I said just now? Innovators, early adopters, early majority, right? So the innovators and the early adopters, they're kind of becoming lesser than the early majority. I hear more and more people owning Bitcoin just to have a stake in that, either to just hold it because they feel the price is going to go up, or they're actively trading it. There are people who are buying and selling. I have friends who download the app, and whenever it goes down, they sell, and whenever it goes up, they sell, and when it goes down, they buy, right? And having that happen with a new currency is not as easy because Bitcoin's journey has been since 2009 until now, right? And even then, it's not fully mainstream yet. So if a new currency gets created, its adoption is going to be a challenge. No, no, no. Technology, it will not somehow solve its problem. You have miners who are actively discussing how to improve the Bitcoin protocol, and they are very, very vested in that process, right? That's why you saw the Bitcoin fork happening earlier this year, where you had Bitcoin Cash that came out, and then you have the regular Bitcoin. And the folks that are supporting Bitcoin Cash are not so many, right? So I don't bet that technology will solve itself, but I know that there are enough smart people in the world who will solve the problem. I believe in it. That's where my bet is actually.
Hello. I have two questions. Number one is, if I want to build a blockchain application, how many manpower do I need? Uh, how many resources I need? And then how about servers thing? And then question number two is, it's about fintech. So how blockchain play a part in this fintech, and in which area? Like for example, financial institution. How blockchain help them? Thank you.
So you had two questions. The first one is resources. Oh, that's the third question. So three questions for the price of one. No, okay. So you have what resources do I need? Where do I start? And what is the use to financial institutions, right? Let's look at where you can start. You can start from here. I've showed you. Do you code? Okay, you can start from here. You can start building your own blockchain technology. If you want to issue tokens, you need to develop an ecosystem, which is very difficult to do by yourself. So you should plug into an existing one, and the best one to plug into now is Ethereum, right? Just being objective, I mean, I have some Ether, but I'm not trying to promote Ether. It's just the most developed ecosystem that supports smart contracts at this point. You can also look into IBM Hyperledger. They have open source the code. And obviously, you can go back to the Bitcoin code, which is in C++, is also open source. That's where you can start from here, and you can build up towards that. There are more than enough resources. If you email me, I can also send you all the resources that you need to start. How many resources do you need? You're looking to run a company, right? A blockchain company. It depends on the scale that you want to achieve. It depends on what you want to do, right? You can have one solid engineer who can code up a secure system of records which is distributed for you. But if you want a lot of people using your sort of applications that you built, you need a team of engineers, right? The moment you involve people to interact with, and they need to interact with you through an interface, you probably need someone who's doing front end. You probably need someone who's going to do mobile, and so on. Depends on how your app is going to form up. For the blockchain side of things, I would say 2 guys who know what they're doing can solve a lot of problems, can get you started, well started. When you introduce your app into the market, you need to develop your web app and your mobile app. So you need those guys with the regular skill sets, front end, back end, full stack, designers, product guys. You probably need those guys. But to build up just a blockchain app, you need just 2, 3 guys, in my opinion. Your third question was, I forgot. Fintech. Okay, what's the use of blockchain in the world of banks, right? That goes back to the slide that I showed you: remittance, payments, supply chains, identity, ownership. Specifically for banks, if you check out this company called Digital Asset Holdings, what they're looking to do is they're looking to use blockchain for trade settlements. So in the world of trading, people buy and sell shares all the time, and it takes up to 2 days to clear it. They call it T+2 or T+3. They have those kind of SLAs. With the blockchain, you can achieve T+0 because the settlement happens on the spot. That's one massive use case. There are others like payments, but it's not taking off very well. There's also remittance, which I spoke about. There's also supply chain financing. Because the biggest problem that banks have with financing an entire supply chain is you get a whole bunch of fake invoices that come to you, and then you end up giving loans or finance on top of that fake invoice, and then you lose your money. With the blockchain, you can improve on that.
So as you said, it seems like banks are very much going to start getting replaced because of this new technology. It feels like the world needs banking, but not banks really. So what's your perspective around the existence of traditional banks? Are traditional banks going to be around in the next 5 years? And those that do stay, what have they done to actually remain relevant?
Banking is a very big industry, right? You can break it up into investment banking, corporate banking, private banking, personal banking, all of that. So to say that the blockchain will disrupt all of that is a big statement, which journalists often do to get reads on their article. But to be honest with you, I don't think banking is going to be replaced. It's definitely going to be improved a lot. And the current organizations, the way they are set up, they are extremely inefficient. I came from an investment banking background, and I have interacted with a bunch of folks and other banks as well. And I can share with you personally how much inefficiency exists in various operations and processes. Those things are going to get cleaned up. Services are also going to get cleaned up. Stuff like when you want to open a bank account, we were talking about this yesterday, do you need to go down into a physical bank outlet to open a bank account? Yes, all those stuff are going to be improved on. So the banks that survive, in my opinion, are those that are able to adopt the technology and provide useful services on that, such as account opening, which can still take days, transfer of money across the world, not really banking activity, but remittance activity, which is done by banks and also other companies which are FIs, financial institutions. Yes. Yeah. Yes. Yes. Good luck to them, right? I love that. I'm really happy to see something like that happening. Because the regular banks have had such a high barrier to entry that anyone who tries to innovate in their space is not able to. In Singapore, if you want to set up a bank, you need $1.5 billion in paid-up capital. Now, which of us in this room has that kind of money? Please raise your hand. I would love to find you. No, it's good that N26 is doing the work that it's doing. It's changing how banking is going to look like, but I'm not sure if they're successful yet, because there are companies in the US, for example, that were doing virtual bank, and they got quite a bit of users, but eventually they failed. So I am not so sure why they failed. We were discussing it yesterday. I have some hypotheses, but then these are my personal views, which is not objectively shared yet, so I'm afraid of putting it out. But I can tell you, like personally, a bank called Simple, I think, that we spoke about yesterday. Yeah, you're a billionaire? You have 1.5 billion? Oh. It is true that blockchain is an improvement on the current double entry bookkeeping system. It is true. It's actually now called the triple entry bookkeeping system. If you're accounting trained, you know what I'm talking about, debits, credits, right? But does it mean that accountants' jobs are going to get replaced? That is such a big statement to make. Anytime I see someone saying that jobs are going to get replaced, I'm like, that's not happening. Because people are smart. You will, you will see what's going on, and then you will learn it, and then you will improve on it. So maybe the accounting role will evolve. But will accountants get replaced? I actually don't know. And I also don't think so. Yeah. So it's good to continue studying accounting. I it's actually very useful knowledge for a business. Yeah. Yes, I can. So South Korea and China are banning ICOs, right? And then you have countries like Singapore and US, New York, coming out with regulation to regulate ICOs. The biggest risk you have with an ICO is KYC AML, know your customer, and anti-money laundering. What money laundering represents is you have black money, which you can then cycle into tokens, and then you can put into different companies. And if you don't catch these guys, then now you have a new way of turning black money into clean money, right? It's actually being done with Bitcoin right now. That's a big risk, and there are a lot of folks apparently in the world who have a bunch of black money that they are now trying out this, right? China is not able to trace down such folks, so that's a huge risk. Even Singapore and New York would acknowledge, everyone would acknowledge that. KYC is know your customer. When you onboard with a bank or you onboard with a FI, financial institution, you have to give your identity documents, you have to prove you're a resident of a country, you have a bank account, you're not a politically exposed person, you're not doing terrorist financing. All of that may not happen in an ICO, right? So the regulations are not in place for KYC AML checks to be done in ICOs. And that's a big risk, a huge risk for countries. So I think what they're going to do, and this is what I think, if they're banning it for now, and what China would do is either come up with its own token, or it would put in place regulations for KYC and AML. Yes, and I explained to you, right? A blockchain can be centralized or decentralized. But now we're making sense. More questions? In a way, yes, and in a way, no. Because so there are governments that are looking to have their own digital currency, right? So they want to have control over issuance of their currency, how much of that currency I'm going to issue, and so on and so forth. But how transactions get confirmed can be done in a decentralized way, right? So the issuance is centralized, but then confirmation of transactions can still be decentralized. Yeah, so it's still an improvement of the current one, current system. More questions? If I, okay, you can, do you code? Okay, perfect. You can create an object, initialize that object. Within that object, you can, what's your smart contract going to represent? Say it's an invoice, right? So you can have to, you can have from, you can have amount, you can have goods, you can have IP address. All of that can be data fields in your object, right? And now you can put it into a block. So let's say you deliver a good, like a water bottle, I deliver it to you. I put a QR code on top of this. Scanning it would mean that you have received this bottle, and that could trigger a payment to me because I delivered the good to you. So that smart contract can just be an object that you can play around with. In a transaction, you don't capture information about how many bottles I delivered to you. You have an invoice, right? You have that invoice, which is a piece of paper. That is stored on a database, which is centralized somewhere. And you can't really verify that that's an actual invoice, right? Because the signature on the invoice is, I could just fake the signature, right? But if, let's say, giving it to you on a smart contract requires a unique signature that's based purely on your ID, it's harder to fake that. Yeah. Yes. So let's see, right? Let's think about this. I've had this question a lot, and I think about it in this way. In an e-commerce transaction, your credit card details, your name, and what you bought gets stored somewhere. Where does it get stored? In some database. Let's say it's an online e-commerce company. Chances are they have set up their servers on AWS or Alipay servers, Ali services, Microsoft Azure, and so on and so forth, right? Can those servers be hacked? Can you log into the servers and change the transaction? If you're a bad actor, which means you're a corrupt employee in a company, can you technically transfer money out of that? All of this is yes. Companies right now place controls to prevent this from happening. They restrict access rights, they toggle access rights, they have audit trails, and so on and so forth, right? But with the blockchain, when you use hashes, it's going to be much harder. I can give you all the access you want, but even then, you still can't change the transaction because you not only have to change this transaction, but everything else above it. That's my understanding. But you seem skeptical. You, with the Manchester United jacket. You're okay? Nice. I'm a fan too as well. I see there's 1 minute left. Any final questions? Yes. Yes. So now it will change to fees. So right now, when you mine a block, you get 12.5 Bitcoin, right? Earlier days, miners used to get 50 Bitcoin. For every block they mined, they got 50 Bitcoin. And then it was half to 25, then 12.5, and then half and half and half and half, until in the year 2140, you will have issued all 21 million Bitcoin. That's just how the system is designed. You will have 21 million Bitcoin, and the halving happens every once in a while, right? Once you have all the Bitcoins that are issued, miners will start charging transaction fees, and that's how they'll make money. It's designed in the system based on deflationary economics. Yeah, but that's separate from the blockchain. We're getting into Bitcoin implementation, right? But today, I want us to really understand what the blockchain is. Okay, looks like we're good. Thanks, guys. Thanks for your time.
Okay, thank you, Pramodh, for a very informative, insightful for the blockchain revolution. Yeah.